The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday. Won't be here this Friday, of course, because it's a special day. But market days, I'm here between 11 and 12 Eastern Time, and you heard the number, 877-927-6648. I'm not surprised we haven't had any foreign and international calls lately. I'd like to get some international calls. I know you're out there. Get those emails every once in a while. So this is a very important session, the first day of July. And in many aspects, what we're looking at is that the E-minis have gone to all-time highs above the 1960 previous high just a week and a half ago, trading at 1964.25, up 1175. Chapman wave methodology, the left side, right side price time match it smashed right through in the 120-minute chart, went through the 1960 resistance, is in leg D up. Very strong technicals, looking good. When you have a rising wedge formation, let me see if I can get that rising wedge formation, which gets broken to the upside rather than the downside, that usually says, nice move coming, and you've got to be a little careful because sometimes you have to then come back and test the breakout level. But it's very positive at the moment that it occurs and usually extends quite a bit from the previous resistance. In this case, as I said, 1960. So let me just move this way. I had a question in the den whether I would do all the indices in my 4 time frames that I like to show for my subscribers. So let's do that here. You've got the Dow, which was struggling. In fact, was the weakest link. Suddenly it's up 0.73%. It's the strongest link at 123, up 123 at 69.50. And most importantly, it is attempting to tackle the all-time high of 16,978. Now, if it can do that and break out from here, that extends the weekly into a leg E. And that's quite impressive action. The support, if there's, let's just say there's a late day failure, all of a sudden the markets turn around and you've got something that, whatever it is, could be some bad, whatever it is, there's a reversal and the Dow closes under 16,872, under the 9-period exponential moving average right here. It says, whoa, be careful. This week could be a tough week if that's the case. If it's just a momentary transitionary a bad mouthing of something, by tomorrow, this strong uptrend could return. Look at that's so. What I've got here, why is that gone? I had a peak F in the Dow. I'm trying to type that in. There it is. So that's E, goes to an F, and that pulls back trough A, trough B, trough C, trough. Nope, just trough C. Then it goes peak A, peak B. Didn't I just show that? That's why I'm a little confused here. Yeah, I did show that just a moment ago. And then it breaks out to the upside. So that's the support level, and the breakout area is above 16,978. Now we're going to go to SPX.X. That's the way I get the S&P. Leg D in the daily. Technicals are improving. The stochastic is at 82%. The MACD hasn't even turned cross positive. If it does cross positive, that'll give another boost to the upside. If, in fact, it fails here, that's going to be a negative. Now, from the candle that was formed last week, doji candle, we're going above that. If there's a close above the high of last week in the S&P of 1968.17, that usually says that the following week should see a higher high, but be careful because intra-week you could see a pullback to test maybe somewhere near the doji candle body, and that would be the close of 1962's area. The weekly has gone into an extended leg D, very good, and that's above the rising triangle, that wedge formation. So this is so far quite a nice positive. Now you asked me about the the 120-minute chart. If you don't mind, I'm going to do this live. So that's A. I think that's B. I just want to see it's been covered by a trend line. 1937.23. Yep, 1927.30. I recognize that as B. You got B. Then you've got a C. And Chapman wave, what is the technique that we're using here? We're looking for a leg D, 4 legs from the most identifiable lowest low bar. And that's what we've got right here. It goes to a D, and then it stalls just for a couple of 2-hour bars. And that is at 11:30 on the 18th. And then it makes an instant restart by going peak A. Oh, did it do that? No, it goes E. I need to check something. 63.91, 63.74. Okay, so it goes E, F/B, and then G/C minus. So it's a G top, and that's what coincides with the MACD turning negative. Right there gets the down arrow, right here gets an up arrow, and now we're in ABC, same as the Dow. In the 120-minute chart, we've gone to a new all-time high in the S&P 120-minute chart. We've gone to an all-time high in leg C to the upside. So let me do this. We've got callers on the line. I'm going to just run the numbers right now. So the Dow, I'll go through them as we move along. The Dow is up 118 at 69.44. The S&P is up 1971, up 11. And you've got the comp index up 47 at 44.55. You've got gold up 7.5 at 13.29. Silver's up 14 cents. High-grade platinum, high-grade copper. Platinum's up 23 at 15.09. Copper's down at 320. At least it's in the 320s. That's good. Crude oil is down a tad at 105.30. And bonds are down 21.30 seconds. Dollar is up just a fraction. It was plunging before, and the euro was in leg C, just like the markets here. I'm going to Ilka in Boston. Ilka, how are you?
I'm wonderful. How are you, Basil?
I'm well.
Well,
Thank
it's
you.
always good to hear.
Yep.
I like to hear that, yes. So maybe before we can go to Sears Holding, which is something that I learned on from Andy, one of the stocks that I've been very frequently now trading. Can you just go to E-minis? Because I have a different count than you do, than I was seeing that what you were showing.
Certainly will.
On
there
the
we
daily.
go. On what time frame?
Daily.
Okay, here we go. So the daily, let me just open it up so everybody can see. So DEFG/B. So daily.
Is that a daily?
Yeah, I'm in leg B, G/B.
So what I did a little bit different. See how you have the last peak D?
Yes, right there.
I called my E and A.
Yes. Oh, if you called your E and A, then we're in C. G/C.
Okay. That's an okay count
wait a
as
minute.
well.
I should have done that. I'm sorry. That wasn't an F/A. That was an F/B, and I should have edited and changed it, and I'll do that right now. That was my mistake. So B, and this is a C. That was just a dumb mistake.
No, that's okay. I just wanted to make sure that I'm
you're absolutely correct, because there's no question that folks, let me just explain. If you're listening and you're not actually watching the chart, the E-minis on, let's see, on the 2nd of June went to 1960.75, and the very next bar was 1916.25. That 50 cents made a difference because it made a peak, but the very next bar broke out. If you're looking at the MACD, the fast-moving average went up, and one of the things, that I often talk about, the fast-moving average pulling back sharply when you've had an instant restart and you've gone to an F, there's a good chance you could go to a G and not recycle to a D. This is different because at E, at that doji high, the doji high that is of the 9th at 1947.25, that became the declining part for the MACD, went under the 9-period move, under the 9 differential bounced, and then now it's coming back up, but it hasn't crossed positive yet. So I'm calling this, yes, G/C. But you know what's really beautiful about this? I've been drawing and showing subscribers how you can have inside channels within channels. And this inside channel showed beautifully two things. One is that it was maintaining the 9-period moving average as support. It was maintaining the dashed up channel. And if anyone took the time, any of my subscribers took the time to look at my Dow chart this morning, I had identified this bar, the candle in the Dow of the 18th, where there were these three small little candles and then a big breakout on the 18th of June, where it opens at 16, what was it? Well, the low is 16,755, and it 16,755. It closes all the way up at 16,911. And I said there's a chance that if we will continue the 6th and 7th session to the upside break of the last cup and project to new all-time highs if the MACD's fast-moving average crosses positive. So that's what we're waiting for. So a market right now looking very good, looking very strong, and leg D in the 120-minute chart, leg C, we're looking at the Dow, that was in the E-mini, and leg C in the daily. Now the question is, you'd like to look at, does that answer your question?
Yes. I just wanted to be on the same page with you because
I'm now on the same page as with you because I was wrong.
No, that's okay. So, as you know, I've decided on Friday that I'm more bullish than bearish because I'm just seeing some. Like I said, I'm not seeing anything negative in the technicals, and technicals are the guiding me. And I have very weak technicals on my ETFs that I tried to get in, and I just decided, you know what, there's just not worth it. So. Okay. Sears Holding is something that I have been in and out trading. I did get in this morning, and it's a tradable thing. But I think on the daily we're only in a peak B maybe. So I just wanted your confirmation of
so
that.
let me show the Tigers exactly. If you're looking at Tiger TV, I've got Sears Holding here. Now this is one. Very strange stock if you are a technician because I must be very careful how I say this. I don't want to say that it's manipulated, but I do want to say...
Careful how you say it.
I'm being very careful. But I do want to say that Lampert, I think Eddie Lampert, is that his name? I was told this, oh man, it must be at least 4 years ago. Someone said to me, be careful if you ever short Sears Holdings because there's a price, nobody really knows the price, but it seems that I don't want to say who they is because I don't really know who they is. It seems that they have a way that whenever it starts to get too low, there are so few shares outstanding that in relation to what they own that they tend to push it back up again. And we've seen that because I know I've tried to short Sears for my subscribers. Haven't done it for years, but we would do it right as it was about to break down and it would pop immediately. And I'll be back with Ilka in Boston. We're looking at Sears Holdings as it makes an H that goes to an M pattern, and I'll be right back. Dow's up 124.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and the Dow, as I say, is up 121. And let me just be clear about this. There we go. When we're looking at the Sears Roebuck, former Sears Roebuck called Sears Holdings, it is in fact within a trading range. Just someone had asked me about the H to the M pattern, and this trading range essentially says until it breaks out, what techniques would you look at to say that it's about to break out, and what techniques would say that it's going to just make another one of those patterns that kind of stalls at the recent highs, and then it pulls back and it just continues this, what I call the lowercase h pattern. But if you're looking at the daily chart, you'll see that it made a slightly lower low to the base that it was forming in the 3870 area. It went to 3775. Now this move up has taken it quite nicely to the, let me just double check, I think that's a 200 period simple moving average. And that's what most money managers follow. And if it has a move higher, even if it goes in this leg, if it goes above 4207, that'll still be leg A, because the others went A, B minus, and this one's a brand new A. The low that we're looking at is 3488. That's the key low that we've got to look at. So, Ilka, this is what I'm looking at in terms of the Sears. The pattern that is very important, besides the daily, which obviously is like the rudder that's going to lead the weekly, is that if in fact the weekly chart does take out in the next 2 weeks, if it takes out 42.35, it could happen sooner if it's going to happen. Well, let's just say what's today? Yeah, by next week, if it takes out 42.35, then this is the pattern that I originally identified years ago as the Sears pattern. Gee, I wonder, no, it's split too many times. I won't be able to find it because the letters are in the wrong place. But this is the one that often it happens from an all-time high or a major recovery high. In this case, it's a pretty important high just in the weekly chart, that high that was made at 45.81. If, in fact, Sears is able to close above that 42.35 level, there's a real good chance it's going to try to test the 45.81, and then 46.22 would be the 200-period exponential moving average. Most importantly, you can see in the monthly chart, and the technicals, the MACD is still okay. Stochastic needs a lot of work. In the monthly chart, the MACD is also kind of okay. It's flat. The stochastic needs a lot of work, and that says to me, hey, don't get too excited. I would treat this as a trade. And if it gets to, I treat it as a trade with a stop. Today's low in the low 39s. I'd say if 30, it's at 40.46. If 39.52 to 39.46 is hit, I take a little bit off because I think that might be the bounce. But if it's holding really well and it continues going, then I would have a trading stop on part of my position, and I'd watch real closely because that inverted candle, like a Roman candle from the 23rd, says that if Sears SHLD trading at 53 cents at 40.49 is able to get to 41.43 and hold, that's halfway through the wick of that candle, an inverted Roman candle, it should test the high. So I would.
What I like from what I started doing is when I see those B minuses, and they are also my target. And usually what I've noticed is the cross above an A minus, B minus is pretty strong when it crosses. So to me, exactly that Roman candle, but as well the B minuses are something that I like to trade sometimes from magnet side for my goals.
So let me follow through with that. The pattern that goes from an H, that's this pattern that goes from that peak F down there in the daily and then makes an arch formation that doesn't test the low. In fact, it holds well, makes another H, breaks a little lower, still doesn't test the low, and turns around to be a doji candle. That can become usually when it's down at the lows, in this case, if it was down at the low of after that peak D top and went to the low of 31.26, if it was down there, I would say that very often becomes the Chapman wave buy signal that fails but doesn't break down and becomes the restart. And then the restart, the third time, is often the one that's the most powerful. This is a higher base, but you can see, I'm going to just move this a little bit. You see the trend line that I've just drawn that goes way back? I'm going to squash the chart a little bit so that you can see.
I do.
Yeah, so the trend line that goes from 23.32 back on the 5th of February, that trend line broke just for 3 bars, and now it's back. The price is back above it. I think you did a really nice thing, very smart, with very little risk, and it's a potential for 3 to the upside, 2.5 to 3 to the upside, with only about a half or a 1 point loss on the down.
Very good.
Thank you for calling. I appreciate that. Have a great day.
Thank you very much. Bye-bye.
Bye. We'll be back, folks. Dow's up 128.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're going straight to Ben in Tallahassee, Florida. Hi, Ben. How are you?
Hey, Basil. Good. How are you?
I'm well, thank you.
Good. Hey, it looked like on the Trader's Corner this morning we were looking for some strong shorts.
Yes.
After today, you thinking twice about that, or what are your thoughts?
Well, you know what I've got? I've got longs and I've got shorts. If you look at the shorts that I picked for today, the two stock ones are not acting all that well. One has just started to improve, and one, in fact, is, let me just check. Let me make sure that I'm talking apples to apples here. Yeah, and the other one is up a little bit, but it's not doing very much. So the identification of those particular stocks allows me also at the same time to be looking at long positions. And as you know, I've got a mixed portfolio. And I think the question really is looking at the long...
it's just really a change in sentiment, I guess.
Yeah, that's what I wanted to discuss as you came up with that question. Let me talk to you about this in terms of the trends themselves. That's even that's the best way to say it. As I'm looking at this, and as I did my analysis last night and this morning, what I was looking at was the sentiment is at a point here where the VIX index has not, even though the Dow is really close to going to an all-time high. S&P is, Qs are at recovery highs. New York Stock Exchange, let me just get to the New York Stock Exchange, NYA.X, broke out. It's in a possible leg F or B, but very strong weekly. And I've been making a big deal about the weekly charts. My big thing here is the weekly charts will be dictated to on the shorter term by what I call the rudder, that is the daily charts. So in your question, I suspect that I'm getting a hint that says, is this a squeeze that's going to push most of the stocks higher? And is the squeeze going to continue to the point where they were at yesterday and where they are at Thursday at the close or early next week? It makes a very big difference because it's basically recycled the trend. Is that kind of your question?
Yeah, I mean, as a kind of a weekly swing trader and looking for more on the downside than the upside, it's been a brutal past several weeks, I must say.
Yes, absolutely. And one of the reasons is that some of these stocks, when the momentum stocks and the Qs made the low in April, that when you look back, you can see that the percentage decline for the majority of these stocks was huge, one of the biggest moves. And the question has to be, was that an intermediate term low from which a major bull move can be reconstructed as they go back to previous or above previous highs for those particular stocks? And is that carrying through right across the board? And I have to tell you, when I look at it, in a certain sense, it's becoming more and more selective. And in another sense, all of a sudden the Dow, even though it's up the greatest percentage right now, has been very much the laggard because it's kind of a mixed composite or has mixed components in it. So now let's go to the real question. And the question is, would we be missing out if we weren't just sitting there long, which has been the absolute right thing to do for almost 6 years or whatever, and just sit and say, hey, this is a market that the Fed has said we do not want down moves. And if there are down moves, be there to protect you and follow some key indexes. And the one index I would now go to answer your question is the VIX. The VIX hasn't gone to the low of 10.34 that was made 3 weeks ago, but it is saying that it's weak and it can't break above the 9-period moving average in the weekly chart. And the monthly chart doesn't look very good at all, because if it closes below the doji candle, very unusual to have a doji candle at a low like this of last month, it could go even lower into August before turning to the upside. So I got to be aware of that. The other is that if you've got a broad index like the NYA, basically breaking out and just steadily moving higher without any qualms, weekly and monthly looking very good. If you've got the what was the other one? Oh, the IWM is just right now breaking out, just powered above the previous high. And this is going to be very interesting, because if this is brand new leg F/B in the monthly chart for the iShares of the IWM, at 120.58 was the previous high. 120.53. It is only 6 cents away from breaking to an all-time high. You cannot deny that this is outstanding action. And that's one of the reasons why I was determined to have long positions and short positions. So I'm going to answer your question as brutally honestly as I can, based on my work and us being stopped out for a very tiny loss, but a loss nevertheless in the short Dow position. And to say to you that I'm watching a couple of things very closely. And to answer that, I'm going to have to also say the XLF has gone to a leg D in the daily. Now when I'm looking and I see that the important components that I was talking about in this morning's newsletter that said the IBB, that's the NASDAQ biotech sector ETF, the SMHs, that is the semiconductor ETF, and I'd mentioned if bonds pull back and the VIX pulls back, then we've got to look at this and say, okay, even though we're getting to a potential overbought situation, overbought can last a lot longer than your patience. And I'm going to suggest to you that right now, just at least for this moment, maybe even for the next few days, looking at the short side in the indexes means that you need to look at specific levels, because even on a technical basis, it's the price. It's not the action of the technicals in the XLF, the S&P Select Financial Spider. That's good. If I was looking just at the the XLF, technically, if I blocked it out, I wonder if I can do that right now. Let me just grab a chart. I'll grab the GoPro, which we missed going long, which is a pity. I'll put it over there.
I guess part of me wonders, with the Fed doing what it's doing, is there any technical tool that can really predict what the heck this crazy market is doing? I mean, I'm at that point.
I think, let me put it this way. I believe you have a valid question, but I've been through this enough times to say that in the Chapman Wave methodology, we have picked the tops based on the peak D's, E, or F, and I suspect it'll do the same thing now. But what happens, as I say, let me just go back to this. I'm covering up the price of the XLF, and I'm showing the technicals. And for those of you looking at Tiger TV, I'm going to circle this right here. If I was looking at that, I would not say that the XLF has just broken to a new recovery high in the daily chart. And yet here I am. I'm going to move this away. And it's gone to a leg D after peak C1, C2 double top. And what's really interesting is, and this is my biggest issue here with my the technique that I've used is that I haven't given as much weight, WEIGHT, to the fabulous I've mentioned it often enough, but I haven't given enough weight to the weekly and monthly technicals. And until they really show a sign of either extreme toppiness or they start to break down, I should have used the daily chart. I kind of, in a way, I did, because we didn't go heavily into index shorting. The Dow or the S&P or the Qs, anything like that. Just we did try for the Dow, and in this particular instance, I'm looking at it and I'm saying, you know what? This is a period. I've recognized it before. It's looking a little like July, August of 1987 to a certain extent, only a certain extent, that people are being forced, the general public are being forced into the market. So now let me just do this for you, because I said I try to be as thorough and as brutally honest as I can. If I'm looking at the TLT was close to breaking to the upside. It hit that resistance line and pulled back sharply today, down 1.11 at 112.41. So that could turn around and make it another little arch formation. Bonds are down only 21-30 seconds, but they are down. So they're still holding quite nicely, better than the TLT. So I'm going to be using, and the stochastics at 86%, and the MACD is still quite good. So I'm going to be using a bunch of things to be able to identify what I consider to be a more viable potential top. But if you look at these charts, two things can happen. One is when you extend like this in a parabolic move, sometimes instead of a big correction, there's a high-level consolidation. You might just merely make a kind of a flaggish pattern or the little cup formation and then break to another level to the upside. I'm not sure that's going to happen right now, and I have to say that the day is young, so almost anything can happen. I'm a little surprised that the VIX, for the very first time, is starting to show some inner strength. And so let me answer your question right now. In the Dow, INDU, it is, if it breaks out to a new all-time high above 16,978, and later this week the MACD crosses positively, that could push the Dow into the 17,200 to 17,280 area. Then I have to reassess what's happening with the technicals in the weekly and the daily. If in fact, even if it makes a nominal high here above 16,978 and it stalls at 17,020 to 17,050, when I say stalls, it means that it starts to reverse and then make lower highs and lower lows, then I'm quite prepared to go back and attempt to short again. But my basic concept for shorting was that it made a peak D, the right shoulder move that it made to the 16,978 was just nominally above the previous high of 16,970. If you look at the technicals, the MACD and the stochastic were very poor. There was a huge volume spike to the upside. That can be interpreted as being bullish because it's going to retest that. I look at that and I sometimes say, okay, that could in fact be an inflection point where you had essentially a throw in the towel, a cascade to the upside. So everything was working fine. But as I said, that daily chart that I showed, that I give subscribers, that said today the 6th to the 7th session, 1, 2, 3, 4. This is the 5th, actually, 6th session that matches very much the candle that of the breakout to the upside on the 18th. That's unfolding. So wrong to be short. That's why I want a mixed portfolio. And since the bias has been to the short side, I don't say that we've got to forget about the bias to the short side. I'm saying there are particular techniques that we're going to use now, and one of them will be if the MACD deflects lower on any pullback over the next 3 to 4 sessions in the Dow. That's number one. And the other is if the VIX remains in this level and actually starts to rally a little bit, it's going to say, hey, there's a diversion between sentiment and the price, and we're going to be real careful, and we're going to use the Chapman wave methodology. And in this particular instance, the 120-minute chart is in leg C, and it says we should still go higher based on that. So it's kind of a long answer, but I'm trying to give it to you based on many aspects. I just want to do one thing, actually, if you don't mind holding, because I had a question about Goldman Sachs. It all pertains to what we're looking at. Goldman Sachs has only made a peak E and is kind of failing and flailing, in fact. If it comes on strong, it's at 166. It needs to clear 180. It needs to clear 171.08 to really show signs of strength. And the other one was, where did it go to? Question was,
but again, to your point, it's the rotation aspect that it seems like we continue to miss.
That is exactly it. That's why when I grabbed my one of my charts that has all the Dow stocks in it, and I'm looking and I'm saying this is really selective. For instance, when I looked at my Dow quote, you said J.P. Morgan's acting quite well now. But not great. It's just acting quite well, but it is helping the XLF. The one that was doing the best was Wells Fargo, and now it's suddenly stalled. All of a sudden, the one that was really doing well stalls out. And Bank of America, let me see where that is. There's BA is not Bank of America, BAC is. Yeah, there's that H pattern that's trying to bounce off the lower support level. So absolutely, when you're looking at rotation, you've got to say to yourself, if a Netflix can, with its weight, can spiral up and go into leg F/B right here to all-time highs, knocking out that 458 round number high of March, which makes it an impressive move. If you've got Facebook, which is doing really well, up one at recovery highs, but not great. Really well meaning.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Let me just finish that with Ben, the question that he had. And if you're looking at this this cup pattern in the Dow, I had an email complaint about having missed the big move up. I'm not sure what that applies to, because if you're looking at the Dow between 16,970 to 16,703, just a 300 point range, the Dow has just been trading within that range, and that's what I've been looking at. So if it breaks out today, it breaks out. That's something very different. So I just need to talk about that issue. I've not been shorting the Qs because they've been very strong. I mean, look at DDD, which is 3D Systems. I had a peak D much earlier on, down at around about the 63 area. Then I went back and checked it out and was down at the up at the 64. A moment ago, it was trading at 68.25, having gone from the 48 area, 49 area just a couple of weeks ago. This is amazing. And that's what's going on. This is, to me, DDD right now is a short squeeze. That's everything about it looks like a short squeeze, not based on technicals. This is based on the squeeze itself. So that's what I wanted to speak to, the rotational aspect. And now let's go to a couple of other things. We've got a great show coming up. We've got the options hour, Think or Swim options hour. So be ready for that. Just programming all the way through today until 6 o'clock. Tom O'Brien wraps it up. Let me go to this. In the aspect of the market itself, the IYT, I also say, is very important. Well, the IYT just broke out for the first time in weeks, above the 148.18 level that on the 9th, it made a peak F. It dropped down to 143 and exactly 142.90, went up, couldn't make a new high, pull back, and now, and I've drawn this in as a potential W pattern, but more like and let me just do this here, more like, there we go, more like a 1-to-1, a peak. This is the lightning bolt that is used by most of the TFNN folks. A to B pulls back and then goes C to D, and that says transportation index to go to 149, and that's leg E in the weekly chart. So I wanted to just cover that and discuss what I was looking at. So it's the transports. It is the fact that you've got a stock like BRK, which was a big leader for so long, Berkshire Hathaway, just stalling, hasn't been able to really participate in this rally. So it's been a very mixed market. It's been a market that says if you're in the right trend and it's working, stay in that position, long or short. In fact, we had a call just a moment ago from one of my subscribers discussing the fact that we added shorts today. Yeah, we added a short, and one of the shorts that we added right now is up. And we got it at 116.11 cents. It's now 116.02 cents in a market that should say that this particular stock should in fact be at 118. So he's identifying it and then staying with a very tight stop. I don't feel upset about that. I think that's good. And the other one, let's see if we've got the other one. I don't even remember what the other one is because, and the other one right now is, let me just double check. Short over 170, 81.70, I'm sorry, and it's at 81.86, so 16 cents above it, and it too should be doing fantastically, and it's not. Days young, we'll see. So that's the way I want to do it. I'm not afraid in this market to short. I'm not afraid to go long, but just staying in a position, that would have been obviously the very best thing. We had the TQQ. That's the 3 times long. The Qs way back. We had it when? We had it back on, had a very nice gain. Took profits at that PT. We had it at 61.46. It's trading at 17.44 right now. Well, that happens. So this is AB leg C in the daily chart. We'll use the same technique to do whatever we're doing. So don't forget, folks, check out my opening calls, my daily service right there on TFNN. And I'll be back later on with Tom O'Brien. Stay tuned for AJ Kaling, Options Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.